Welcome everyone to another version of Phoenix Coffee Talk. I'm Marcus Fleming with Redfin, and it's our local lender, Justin Tenyes, with People's Mortgage. We're hanging out at the coffee shop down in Gilbert. Great place for pastries or just to hang out and enjoy the beautiful scenery. Nice little rose gardens all around. There's a little neighborhood, local garden and farm they got going over here. It's a pretty cool place to check out. So definitely give it a shot sometime. Today we're going to talk about the difference between mortgage bankers and traditional banks. That seems to be a big confusing point for home buyers sometimes. Do I go with this guy that works with some company that I'm not real familiar with, or do I go with my traditional bank that I do my banking with? What's the better option? Am I getting better rates because I got a loan with them, I got an account with them, whatnot? So let's talk about how they operate differently, and these are terms of what the buyer is going to care about.
Okay, absolutely. Little history lesson, just real brief. There's really three different types of ways to get money in the United States. If you go to a bank and you want to borrow money, at least for a mortgage, we're going to talk strictly mortgages and not really venture outside of that realm. You can do it through what's called a correspondent lender, like People's Mortgage, which is a mortgage bank. We will lend the money, we will fund the money, and you may make one or two payments to People's Mortgage before we sell your loan to one of the bigger banks or bigger servicers. One of the older models was the mortgage broker. The mortgage broker wasn't a mortgage bank. They didn't lend the money, but what they did is they were kind of that true sense of the word broker, and they went out and found a bunch of different banks in the United States to lend money, and they tried to provide the best program for their customer, but the loan was actually funded by that bank, whoever they found. So there was the mortgage broker, and then there's the big traditional bank, which is your Wells Fargo, Bank of America, Citibank, that you go in and you have your checking savings and you can do a mortgage with. The mortgage broker with financial reform has pretty much gone away. There's very few mortgage brokers left in the business due to some restrictions on pay and also on what they have to disclose. So your really choice right now is a mortgage bank or a traditional bank. And the biggest difference between them is the mortgage bank only does mortgages. They don't have any other risk on their books, and they don't have any other motive to have you as a customer but to do a loan. The big mortgage banks have a lot of different sources of revenue, mortgages being one of them. One benefit with the big mortgage bank is you have everything in one little neat package. So if you have your checking, savings, you may have your mortgage with them as well. Circling back to the mortgage bank, they could do a loan and sell it to your bank that you currently check with. So you really certainly want to do your research. One of the biggest benefits that I think to a mortgage bank, and of course I'm a little partial to it, is our cost of business. Our cost of business tends to be a little bit lower because we don't have the structures in place that a major corporation would have. So when usually we can pass those savings on to you in the form of fees or rates.
And when somebody's working with a mortgage banker, the loan officer in that scenario wants the buyer to come back. They're looking for referrals, for refinance opportunities. These guys are also, it'd be fair to say, almost self-employed, for the most part.
Absolutely.
So it's, think about mom and pop local shops. I mean, local's good. Sometimes it's also a little scary when talking about money and somebody handling your money, but at the same point in time, these guys have a different motive. They don't have a 9-to-5 job, and they're not paid a base. They don't have managers that are looking over them and making their jobs not enjoyable. There's just, I don't want to sound like working for Wells Fargo is terrible. It's not, but there's a different motive. So at the end of the day, Justin wants you guys to come back, wants referrals, wants to build a long-term relationship with you. A lot of these guys will become friends with. Justin meets almost everybody face-to-face at least once. So there's a reason for a relationship and trust building with a mortgage banker.
Absolutely.
That's not as common, right?
Absolutely. And like we touched base in one of our previous sessions, the reasons to use a preferred lender of the realtor. My goal is to be not only your customer but also the home buyer's customer. So I have dual motive there, where the big bank will tend to kind of have an internal call center that's going after the customer. So a little bit different motive.
Absolutely. So rates, when it comes down to it, who's got the better rates? That's the question everybody's wondering.
Unfortunately, you have to do your shopping. I can't say, for certain that we will always be better than Bank of America or Wells Fargo, or they will always be better. Each different day presents different rates, and sometimes different lenders want different loans on their books. So if, let's say, we need a bunch of 5-year adjustable rate mortgages on our books, we may offer a great 5-year adjustable rate mortgage that day.
Okay.
Let's say Bank of America needs a lot of 30-year fixed loans in their pipeline. They may offer some sort of special to their branches going across the United States to get those 30-year fixes on their book. So, unfortunately, it's every day is going to be different, and I think again we touched on it before. Grab 2 or 3 lenders, shop with 2 or 3 lenders, and ask them to give you rate quotes every day, so you can see which one's trending which way.
Absolutely. Sounds good. Anything else to add?
No, I think that's about it. And just get out and enjoy some coffee.
Thank you very much. Thanks for joining us. We'll catch you next time.
Take care.